Let's talk about Q2 earnings season. So Q2 earnings season is here, right? And, putting aside what happened last weekend, Q2 earnings is still happening, all right? Still going on. And although it's not the number one story in the news right now, it will soon be. I want to talk about how not to trade this earnings season. I want to give you my step-by-step on how I trade earnings stocks. And then I want to end this little session with my top picks for Q2 earnings. So very quickly, think about this, folks. When we look at earnings, most traders will hear about a stock in the news that's announcing earnings tomorrow or the day after tomorrow or a couple of days from now. But typically more and more, you get that buildup of what's coming. And what it does is it flags an emotional part of our brain. And for many people, it takes over and they decide to, based on that what's going in one ear doesn't go out the other ear, and they take an emotional position on the stock or an option on that stock, and they soon regret it. This is an example. This is Amazon last year, where stock went up, and then right after earnings, stock tanked. Stock went up, right after earnings, tank. And again and again. And the problem is that you hear about Amazon, you see those trucks rolling outside, you're getting charged up about what's happening on earnings. You say, I'm going to buy this right before earnings because it's a great stock. And then you end up seeing it down considerably. And what do? Well, a trader buys on emotion and they'll sell on emotion too. And then they immediately go from greed to fear. Not the way we want to trade earnings, folks. Okay. So again, what do we not want to do? We don't want to get excited about a stock everybody's talking about this week. We don't want to buy options on that stock today, like right today before earnings are coming out. And we definitely don't want to hold through earnings and exit the day after the announcement, because that's typically going to be bad for the stock trader and even worse for someone that buys options, especially at the money or out of the money options. So what we're looking at is the safe area to look for patterns. And the same stock, Amazon, we've seen times where Amazon has gone up that week or so prior to earnings. And there's the safe pattern. Looking for stocks to consistently rise or fall before earnings. And you look to go bullish before on these patterns up. You look to go bearish on these patterns down, all getting in and out and letting the emotional traders take it through earnings. So what do we want to do? We want to look to trade opposite of the crowd. Now, here are the earnings patterns that I see for this Q2 season. There's a fair amount of them. I took these top four. The reason why is over the last year, they've had 100% win patterns. All right, you got ARM Holdings, 100% of the time, it's moving in the same direction before earnings. Walt Disney, 100% of the time, moving in the same direction prior to earnings. On Holding Ag, same thing. This company has been moving in the same direction prior to earnings. And Uber is going to round out that for 100% move. And some of the stuff that I see here, because I've got the spreadsheet broken down when their earnings dates are, whether it's after market close or before market open, when that next earnings date is scheduled, what's happened over the last year on the pattern. I also have Greeks. I have what has the implied volatility done. And in this case, they've all gone up prior to earnings. That's great for option traders. Okay, there's some theta decay that happens. I mean, if you're an option trader and you're an option buyer, theta is going to drop in most cases, but not every case. We see delta effects, which tells us how much that stock actually moved prior to earnings. And then the most important thing I'm looking at is the average return on investment for ARM Holdings, 123%, Walt Disney, 68%. ARM Holdings, 123%. On Holding, 60. On Holding is the sneaker company. They do the On Clouds. I have On Clouds, love them. And then there's Uber Technologies, which has averaged 105% on their moves. Now, I'm going to tell you this. What's the pattern on each? Guess what? Some of these are bulls and some of these are bears. I'm going to let you figure that one out, but we're going to take a look at the top one, ARM Holdings, and I'm going to show you how to figure this out. So if I'm looking at ARM as a trade, I'm going to look at two things. Number one, I'm going to look at that pattern that's happened time and time again. And the pattern is that it typically patterns up the week prior to earnings. Seen it in this particular pattern, so you see the last three, but it's had at least four. The second thing I'm going to look at is if I'm an option trader, if I'm not going to try to buy the stock a week before earnings and then sell it right before earnings, if I were to buy the call options, what did the call options do a week prior to earnings? Well, guess what? They've gone up too. The volatility's gone up, so that means there's a lot of people leaning into these options just before the earnings report. This is good for option buyers. So what do we do next? Well, with ARM and with every other trade, if this is something that excites you as a trader, I want to verify that earnings date with a couple of sources and make sure that I know when that earnings date's coming out. I'm going to enter that trade, either the stock or the options, several days before earnings. All right. If it's patterning up, I'm going to look at calls. If it's patterning down, I'm going to look at puts. I'm going to use near money options because I want to take advantage of that rise in implied volatility. And I want to use options that have an expiration date that are just after the earnings announcement, because those are the ones that are going to be most affected before the earnings announcement. And finally, I want to exit the day before the announcement. Let everybody else deal with the emotion. I want to deal with the pattern.